If you're looking for highly educational market analysis, then you are in the right place. This is the Transparent Effects Academy. I'm Nick, and I'm a top podder on TradingView with over 190k reputation points. So without wasting any more time, let's jump straight onto the charts. In today's video, I want to speak about GBP USD. Now, why do I want to speak about GBP USD? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames, going down on the lower ones. We will also check what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that here in the monthly, we're currently testing a very strong level of previous resistance, which was resistance here, again here, and again here, which the market broke to the upside and then went to retest at this level as support. Because as you know, previous resistance, once it gets broken to the upside, is turned support. We just had the retest of this support, and we can expect a potential rejection higher. Dropping down on the weekly time frame, what do we have? Now here on the weekly, we can see a strong impulse to the upside followed by this correction. Now in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just retraced exactly to the 0.618 golden ratio of the Fibonacci taken on this weekly impulse, which is a very strong level of support and demand that we did expect the market to test and then to potentially reject to the upside. So here on the weekly, everything seems quite bullish. Dropping down on the daily time frame, what do we have? Now here on the daily, what we can see is that the market, after creating this W formation, went and completed the pattern at the neckline, which is this previous resistance turn support, and then from here started the move to the upside that we wanted to see. In fact, I did make a full breakdown of GBP USD when the market was around this area, explaining all the reasons for which we expected this correction, and then from here I made another breakdown explaining all the reasons for which we expected this continuation to the upside. And by the way, I will link in description these two previous analyses so you can go and check them out for more free education. Now, also here on the daily time frame, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse, and we can see how the market, in testing the 0.382, has also started to create this W formation. And in general, after the creation of a W formation, what you want to see is the market create a move to the downside to go and complete the pattern at the previous resistance, turn support. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing, and we check the data specifically for the pound, we can see how obviously net positions have been increasing. However, what we can notice is that in the short term, we have seen a decrease of the net positioning, with 8.7k shorts added with the last report and 7k longs getting closed, meaning that in the short term, if the market will provide a little bit more continuation to the upside, we could expect some short-term weakness and completion of the W formation at the neckline, which is this previous resistance turn support. So how we will be approaching this potential shorting opportunity with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, with students, what we will be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we will have to an intraday bearish market. And if the market will shift from an intraday bullish to bearish market, and provide to us one of our valid entries, at that point, we could be looking for a potential short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to complete the pattern at this previous resistance, turn support here on the daily time frame. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. We're currently running a special promotion, so I really suggest you go and click down in description. With the mentorship program, first you learn all the rules of the strategies, then you also have the possibility to ask questions every day and get the answers, as well as having a daily market breakdown every day of the pairs that I'm looking for according to the rules of the strategies. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.